Hi, this is Jack from Alpha Charts with a state of the market video. Today is December 25th, 2021. Merry Christmas to anybody who celebrates. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, a couple housekeeping notes before we begin real fast. First off, if you haven't liked and subscribed to my YouTube channel, please do that. I'm almost to 10,000 subscribers. Would love to get over that 10,000 mark. It's a nice round number, nice way for me to end up the year. So again, if you can subscribe to my channel, I really do appreciate that. Second thing is I came across Ryan Selkis did his 2022 crypto outlook. If you're into crypto or want to be interested in crypto, it's a long, deep dive. It's like 165 pages, has great information, well written. I went ahead and retweeted it this morning. So go ahead by Alpha Charts 365. You can find the retweet. You go to Ryan Selkis, 2-Bit Idiot on Twitter. It's pinned at the top of his page, but it was really good. So I always want to give you guys, if I come across something that I really enjoy, want to share it with everybody. Okay, so that's what I got for you. Let's get started with the charts. Starting with SPX, like we always do. All right, so we were watching for this potential double top, right? We didn't know if we were in a range, what was going on. Well, right where we would expect to hold, it did, right? Prior resistance, support, and now it broke out to all-time highs. That's exactly what you want to see. This is a very bullish scenario. Love it, especially going into the most bullish time of the year, right? The Santa Claus rally starts Monday and goes through the first 2 days of trading days of January. So this is a really bullish time of year, seasonality wise. And now we're starting to break out. I know it's lower volume. I get it. But only price pays. And so as of right now, we have to go with what we know. Are we extended now for the moving averages? Maybe a little bit. So, I mean, so a sideways day or two is very possible. But I think over the next week to, 7 days or so, trading days I'm talking about, tend to be bullish. So let's go with that, but looks pretty good there. Now let's see if RSP confirms. So RSP has not broken out yet. So that's something to consider, right? I'm going to move this line actually up here because that seems very reasonable. So yeah, so RSP has not broken out yet. So there's no confirmation on the equal weight. So it means, just the large caps we're kind of leading the market up a little bit. Doesn't make it bearish in any way, shape, or form. Just means that there's room to the upside, right? That there could be more participation. Now, once we get into this 161, maybe a small pullback and then hopefully a breakout. Again, maybe a little extended. Doesn't mean that we can't keep going a little bit higher, but then you have to expect a little bit of a pullback of some sort. Again, the volume, as much as I don't love it, it's not bothering me that much in the short term. We'll let price action guide us. I think that's the better way to go. All right, looking at the Qs, I was watching for this potential head and shoulders top. Really everything held where they should have. We had this trend line held. We had this prior resistance support. It held, right? You had a little dip below and then it went right back up. Hasn't made all-time highs yet, but again, at best now I would say we're in a range. I'm going to, I think, take off this because I don't think it's really valid anymore. And I think maybe that's a better valid, right? False breakout, false breakdown, in a range, chopping around, above 400 or so. I think things get very bullish again. Again, don't love the volume. But right now we're above all the moving averages on the Qs and they're turning up and we're getting bullish crosses and all kinds of fun stuff. So I think that again, going to seasonally bullish time of year, no reason to be bearish, at least in the short term, right? No one knows what happens, come end of January, February, but that's a lot of time will pass since then. Equal weights. Again, so this head and shoulder pattern still maybe, in maybe in play. We'll find out. So I'm not going to take this one off yet because we don't know. But if it breaks above, 87-ish, right? Gets above 87-ish, I think then it's definitely, gone. Again, looks very bullish. Price back above the 50-day. That's the blue line. 29 and 23 are about to, shorter term moving averages are crossing bullish again. 200-day, which is the red line. So an uptrend again. So nothing crazy bearish, and if anything, very bullish looking on the equal weight cues. Again, that's nice to see. IWM. Yeah, again, held where it had to, right? This would have been the very, very bearish look if it would have broke down here, but it didn't. Nice hold, bounce back. Again, now you have a flat 200-day on the maybe slightly declining or starting to decline. So price is right up to it now. You have the 50-day starting to decline, right? So you have some longer term moving averages that are now starting to decline. Again, this has been a range for almost an entire year, right? We're coming up on 11 months of being in this range with the false breakout. So it still needs work to do. Price needs to get above this for sure 200-day, right? Nothing good happens under the 200-day, and hopefully above this 50-day too. And then we could have a continuation higher. Again, if price stays below these two longer term moving averages, it's a much more bearish scenario for the small caps. And small caps are a risk appetite index, right? So we don't necessarily love the idea that these small caps are below the 200-day. So that's a negative, but it held where it had to, and that's positive. So again, those are the messages the market's given us. Then we are determined from everything else what's going on. All right. I think IWO should probably be about the same, and it is roughly the same as IWM. They tend to run about the same. Let's keep going to the XLF. So financials, again, we just want to see them participating, and they're not breaking down in any way, shape, or form. Longer trend is higher. They are below the 50-day, which we don't love, but it's not that far below it. So a nice little pop here, and that will hopefully rectify that situation. Again, held where it had to, never violated the 200-day. That's all positives. SMH, SMH is just, the beast, the leader as a indicator. It never broke down, never got below the 50-day, so it held up better than most. It's above all of its other small, shorter term moving averages and longer term moving averages, and is right near all-time highs. And if you see what's working in the market, semiconductors are leading the market higher at this point. And as an indicator, SMH is, again, barely broke down. I just tagged the 50 and started and bounced. So as of right now, very bullish scenario with SMH leading. We love to see that. Lumber over here, we were worried about it breaking down. It didn't. It came back up here, pulled back, and now is back above all of its, again, longer term, medium term, and short term moving averages, but still in a range. So no real signal. Here's your VWAPs from some year to date and from the highs, and it's kind of right there. So again, no signal as far as indicator wise. It's just in a long range. Again, once it breaks above or below this range, that's when we'll get a signal. So I've been watching the bond yields, and I made a big deal about it last year. We're just going to clean this up, get rid of all these moving averages. We don't need any of that. All right, so I was saying that we need to be very cautious last week because we were seeing this big volatility. It was kind of had a remnants of this area right here. And if we were to break above 1.52, that would be time to get much more bearish, especially if it was a big spike looking like this. And we got the exact opposite. We got the breakdown in bond yields, credit spreads. This ratio chart, again, IEI, government bonds to high yield bonds. So that is, seeing high yield bonds, and that's a risk appetite bond, outperform government bonds. That is excellent. And that's what we want to see. And so the exact opposite of being fearful happened. The bond market's telling us that things are okay. There's nothing structurally wrong. This was just a run-of-the-mill correction, at least right now. Now, if we start seeing reversals and stuff looking like this, we change our mind. That's why I post, like I posted this chart on Twitter when we started to see it breaking down and what we were looking at all week long. So if you don't follow me on Twitter, you probably should, because I'm updating a lot of these charts in the week too. Anyway, so bond yields looking good. VIX. Yeah, I mean, so we had the spike and now it's starting to come back down into, under 18. That's great, and it's declining. So we love to see that. The VIXN, same thing, it's declining, and that's what we want to see. Put call ratio, we had the spike up to here, again, got close to 1, and that's been the area where we seem to see the reverse. This is extreme, right, when it gets up to here. And I think maybe I could put a line around 1, and 1 seems to be like for medium term run-of-the-mill correction where it tends to get to. So maybe I'll do that. I think I could do it in here, line, horizontal line. I'll put it right around there, and then I know I'm doing this in real time. Coordinates 1. Okay, so it's right at 1. And that really does seem where it kind of goes and hits and then reverses. So, so that multiple times. So we're going to keep that line in there, I think, going forward. I think it's useful for extreme stuff. That's when this 1.4 line comes in, and you can see it's done it on extreme situations in the past. All right. So, but anyway, put call ratio looking good. It's 1 foot in, 1 foot out. That's what the market loves to do. Get whipsawing traders and not knowing, what they should be doing. So, so everything looks fine there. Let's look at some breadth studies. Value line geometric index, and held where it had to hold, made a higher low, and is now moving higher there. That's excellent. I'll just extend that line a little bit, that box. Yeah, again, in a range, that's okay, but we see improving breadth. And let's see if that's confirmed by the MMFI, which is percent of stocks above the 50-day moving average. And it is. You could see that it is improved, kind of held right in this 22-23% range. And now we're up to 37. Again, is it stellar breadth? No, it's not. But it held where it had to, and it's improving. I think that's what we want to see. There is room to the upside. Love to see that. So that all looks good. Gold. So what's gold doing? So again, let's look at weekly. Is it making a giant pattern? Maybe. I mean, it's making higher lows right here, right? It's also making lower highs. But it's building out maybe a right side to this. And if it is, that would be if it breaks this downtrend line in any real way, that could potentially be a flight to safety / risk off scenario. As of right now, it's no real signal. But looking at as a signal, again, nothing to see here. As a tradable asset, no confirmation, slow mover. So nothing to do with gold right now. And let's look at Bitcoin. And so Bitcoin, let's look at candles. So on the weekly, it's back above 50,000. So let's go to daily. Still below the VWAP from the high. So that's something to take note of. Right, still below the VWAP, still below this 53 area. So maybe it's going to come back, and that's right around where the VWAP is going to end up being, right in this area. And so that'll be interesting once it gets there. And I think it will get there. I think that it's going to come into this area, and then we'll find out what's going to happen. But as of right now, it's just in a range, and it's not really doing anything at all, right? This is an intermediate area right here. You see it, it's been important in the past. And it looks like it's trying to make a bottom, right? We'll see if it does. Again, you could even put a downtrend line here, probably, right? Something like that. Like, there's a lot of stuff going on in this Bitcoin chart that you could kind of, this area right here is going to be really important, right? So let's, just kind of watch that again as a risk on, risk off. It seems to be more correlated with growth stocks than it does with a risk off, flight to safety. I'm not really seeing that correlation as of right now. I'm seeing it more correlated with a risk on. So again, seeing a bottom here, that'd be risk on. There's still some more room to the upside. Would love that. Ethereum, very similar action, maybe a bottoming action coming here. A lot of these tails down here, so it shows some support. But again, not until it breaks above 45,000, am I really going to be like, okay, things are good again? It's got to get above here ish. So there's some Bitcoin, Ethereum, again, more correlated with growth stocks, in my opinion. So again, that's how I'm going to start using this indicator. And again, it's showing that, is this a bear flag? I don't think so. It would have to break down for that to happen. I think it's more potential bottoming action than when it gets into this overhead supply. Who knows, right? Who knows? All right. So final thoughts on all of this. Great action in the Qs this week, held where it had to. We got bullish scenario, a bullish seasonality, potential overhead supply coming up in some of them, a little room to the upside, and we'll find out what's happening. But, as long as things are, looking good to the end of the year, no reason to be long. I know this week I've gotten long, I'm not 100% long, about 75% or so. As I started seeing things turn, I started seeing my favorite scan go ahead and start to give me more names. Remember EDR and Switch SWCH were the only things on there for a while, and they've both done very, very well. But now we're starting to see it populate with other stuff, so that's always good. So you're seeing breadth improve. You're starting to see improvements in everything. So I think, next week, things are looking pretty good. Again, a little bit extended from its short-term moving averages, right? A little bit extended, but may have a little bit of room to the upside before we get some question marks. So hopefully we have a good week. Santa Claus comes to town, and again, Santa Claus rally starts on Monday, goes through the first 2 days of January. And then we look at the January effect, right? The first day of January tends to be an indicator for the year. And then the first week, and then the whole month of January, depending on how they go, tends to be a barometer of what the year may look like. All right. So again, good luck this week. Happy holidays. If you haven't subscribed to my channel, please do that. I really do appreciate it. We'd love to get over the 10,000 mark before the end of the year. Again, need about 25 more people to subscribe. So again, if you do that, thank you very much. Don't forget Twitter at AlphaCharts365. I'm always posting things that I think look good or important, like this right here from Stupid Idiot, Ryan Selkis. Good follow. And again, this report was excellent. So check it out. Hope you have a great week. Bye.